It's when I realized how detrimental it was that I was making future Russ pay for present day Russ that I finally changed my ways. Hey, what's up? I'm Russ. This is Stashing Worthy Acorns, where I put $50 into the Stash app, the Worthy Bonds app, and the Acorns app. And I'm adding $20 a month for 2 years, and I'm sharing my knowledge and experience and what's going on every week with you. So as I was saying, debt is future consumption brought forward, and you balance that by spending less in the future. Unproductive debt reduces your future growth, as future you is paying for present day you. So as Robert Kiyosaki said, and I'll sum up his awesome book, Rich Dad, Poor Dad, if it's not putting money into your pocket, it is a liability. And if it is putting money into your pocket, it's an asset. So buy assets and stop buying liabilities. And worst of all is do not go into debt. Don't buy liabilities with debt. That is the death cross. That's the worst thing you can do. So that's it. That's how stupidly simple it is. If it doesn't put money in your pocket, don't use debt to buy it. So no cars, no trips, no clothing. I guess electronics could fall into that category because if you're using the electronics to make you money, then it could be considered an asset. So the house is a gray area. I do have a mortgage, and a house is a liability because I'm paying property taxes, I'm paying bills, I'm paying insurance, I'm paying upkeep. I have to fix things. It takes time, money, and effort to run a house. So it is a financial liability and a time liability. And the only way that a house becomes an asset is when you sell. When you get that money in your hand, when you get that cash in your pocket from the sale, then it becomes an asset. But until then, a house is a liability. All right, let's get to the bar chart. You can see that Worthy, it's a little skewed because I got some free bonds from Worthy Bonds. Thank you very much. So Worthy is in the lead. And I have tapered that back and suspended the automatic bond purchases for a little bit so the other two can catch up and we can kind of keep this competition even keel as possible. But Worthy's in the lead, Stash is a healthy number 2, and Acorns is down there bringing up the bottom. Where did the $5 this week go with Stash? That's right, JNJ, one of my all-time favorite stocks, super blue chip company. I'm not going to get into the analysis here. Just know it's very tough to go wrong with Johnson & Johnson, and about the best thing you can do is just buy it at a better price than it's at. So when Johnson & Johnson dips, I'm buying. So you can see here, Johnson & Johnson was the lowest of the 3. So whatever of these 3 is the lowest each week is what I'm putting my $5 into. Stash is at $128.11 for an overall gain of $13.11, or a percentage gain of 11.40%. And as you can see, I got Johnson & Johnson dividends last week, and boom, it went right back in. I reinvested it, so I got more money coming in, and that's going to only help inflate and get that snowball rolling faster. Bonds time again. Thank you. Check out my last video if you didn't see it. I show what I got in my Worthy Bonds loot bag that they sent me for being so cool. Worthy Pure Capital 1, which is the first iteration I got in the tail end of the bonds that they sold out of, is at $50.61. Worthy Pure Capital 2 is at $90.34 for a grand total of $140.95. So I've gotten a total of 95 cents interest from Worthy Bonds, and if you haven't been following along through all the market volatility, I've never been down 1 penny that I've put into Worthy Bonds, which is awesome. Really loving it, really safe, and in a little bit I'll show you what my emergency fund looks like, as I did move half of our emergency fund into Worthy Bonds. Acorns, I'm going to run through quick. I'm just not a big fan of it. It's just not my style. It's not bad per se. The reason I'm not a fan is because I'm paying Acorns to pay ETF fund managers to pick which stocks I'll be invested in. So not a huge fan of them because I feel that I can just invest in blue chip companies and they'll do as well, if not better. But Acorns is at $119.34 for an overall gain of $13.47. For an overall percentage gain of 12.25%. And those numbers are a little skewed because I put in a double payment to Acorns. So it's gotten a little bit out of hand here. Stash is the only one that's been perfect every time. I messed up with Acorns because I tried to move the payment from Mondays to Thursdays so I could put that in line with when I'm buying my stash stocks. I'm just going to keep putting money in because, as the saying goes, it's better to spend time in the market than trying to time the market, which is why I dollar cost average in and consistently buy all the time. Now let's check out my Worthy Bonds emergency fund. This is under my wife's name as I couldn't and didn't open up another Worthy Bonds for me. So we have currently $7,112.08 in there. We have 711 bonds and we have made $2.08 of interest. So this is brand new. And we're currently getting almost 99 cents a day in interest. I think that's cool. It beats the pants off of CIT Bank and the 1.25% interest that I was getting over there. But this is a little bit more risky, but I am confident in Worthy Bond. I'll keep sharing every week what goes on with that. All right, it's a beautiful day. It's my wife's birthday today. Happy birthday. I am going to get out of here. All right, now the disclaimer. I am not a licensed financial advisor. This is not financial advice. I am just a guy sharing my knowledge, experience, and opinions with you, the beautiful viewer. Thank you for stopping by. You need to do your own research before putting any money into the stock market, and you need to consult a licensed financial advisor, as investing in the stock market or bonds carries risk of loss. I'm going to throw out some new videos called Sea Stories. I'm telling stories from when I was in the Navy, things that may be related to you, motivation-wise. Anybody that may be thinking of going into the Navy, check me out. Something I'm looking forward to sharing with. I'm going to try and keep them as PG as possible. There are some stories that I cannot tell, and if we were ever in a bar over a beer, I could tell you, but I'm not sure I want to share some of these on YouTube with all of you. So I have a podcast called Dapper Dividends. Check that out on all your major podcatchers. I am also on Twitter at RustyRam78. Follow me and let me know. Say hi. And that's it. Quick and easy. I'm going to get out of here. And remember, everyone you meet has something to teach you.